Some analysts say gold's rise past $1,800 an ounce is evidence of an asset bubble. Others say it has a more ominous message for the economy. John Nadler at Kitco.com sees a change in the market.
I think that the ground under the gold market is shifting, and we need to watch the latest metrics on the supply and demand side, which actually show that the second quarter witnessed a 17% decline in gold demand overall and a more staggering 37% decline in the investment category, led by lackluster ETF demand. That tells me a lot of things. First of all, that price resistance is developing in the gold market, and that perhaps some of the so-called smart money is being pulled off the table, not just by George Soros and Mindich, but perhaps by a few other funds as well.
We had a very hot CPI number today. Will these inflation worries further stoke the rise in the price of gold?
Well, I mean, if you're looking at the price of gold right now, I think it's baking in some levels of inflation that, 0.5% rise in CPI or 0.20% rise in core CPI would not even come close to. I mean, I don't think this is inflation anticipation. This is momentum and speculative-based hedge fund betting, basically. That's really what's going on. Plus a good amount of gloom in the equity markets, which is sucking money out. But that has a double-edged sword potential because obviously it could result in margin call-related gold sales if equities tank a lot further.
Finally, you said we've been seeing some hedge fund sellers. What about central bank sellers? We have a nice price for gold out there. Maybe we're going to start seeing some gold move from central banks.
That is indeed still a potential danger item on the agenda for the gold market, because basically you have a situation where gold is kept in the basement by central banks for a very rainy day, and obviously it's raining pretty hard over in the old world right now. Many a central bank, Portugal, Spain, Italy, for sure, have quite sizable tonnage in reserves, and with prices having risen to such levels as we see them now, the reserve in gold has now become a huge percentage overall. The temptation might be there, perhaps not to necessarily outright sell, but let's just say, how about pledging it in order to secure some additional funding? That's always a possibility. We also don't know what the result of Venezuela's nationalization of the gold industry might result in. If, in fact, they repatriate $11 billion worth of gold from overseas, and that is in the form of unallocated gold, that could put pressure on prices. If it's physical, it could support prices. So it's still, the jury's out.